Good afternoon, everyone. With the election right around the corner, we've seen a good amount of volatility enter our four major index markets. This is the S&P, the Nasdaq, the Dow, and the Russell. And a result of this pre-election volatility, we've had some really nice opportunities to trade this chop, to trade this volatility, and take advantage of really the volatility levels that we have at our disposal. Now, using our futures volatility box here in today's video, I'll focus on the four major index markets. And instead of focusing on the trade mechanics or the entries or anything of that sort, I want to take a high level view here just so you can see just how effective not only these levels are, but also the sort of volatility and the chop that we're seeing. So now to give you an idea, in the S&P futures here, the trades that we had in terms of actual breaches of our volatility box was when we had our breach of our long volatility box entry lines right here. We then breached our short volatility box entry lines. We then breached our long volatility box entry lines right here. And then finally, a short volatility box entry line right here. Now, if you take a zoomed out approach here, what I thought was very interesting is for really much of the day, we just chopped in between our volatility box levels. And these are levels that we have ahead of time. They're not repainted levels, nothing of that sort. They're based off of our volatility ranges. And that's where you can essentially be prepared, take advantage of these moves when we have price action fall into or rally into any of our volatility box lines, which then allows you to take advantage of this chop and trade these moves in a way that's very systematic and process driven. So that was the S&P futures today. And in terms of actual trades that breached and triggered and met our rules, that was this guy right here, which we had a breach of our long volatility box entry lines, along with an edge signal confirmation, which then gave you an opportunity to enter at the edge, and then gave you a really nice move up higher. And then you also had that short opportunity breach using our volatility box edge along with the edge signal, which then gave you a really nice flush move down lower. Now, if we move on next to something like, say, the Dow futures markets, you should notice something similar as well, right? So again, let's start with a zoomed out approach here where you had our long volatility box breached. You then had the short volatility box breached. This didn't happen in real time, so I'm not going to count that. Then you had the long volatility box breach again, this time again giving you an opportunity to enter, along with this guy as well. Here we had our edge signal and an opportunity to enter at the sign lines. Here we had a short signal, but this was toward the edge of an hour. And then once we had that move really pan out, you had yet another opportunity to get long the Dow, along with edge signal confirmations, which then rallied into our short signal, which again gave you an opportunity to get short the Dow, which then again fell into our long volatility box entry lines. And again, keep in mind, these are all zones, these are all levels that we have planted ahead of time. To give you an idea of what that currently looks like, for example, you'll see an after hours activity here for the next hour right now. This is the 4 to 5 p.m. Pacific hour. We already have our entry lines drawn on both sides, right? So we have our opportunity to get short if price action rallies into this zone, or our opportunity to get long if price action falls into this zone. And so these levels are painted ahead of time. They're not repainted, nothing of that sort, but it allows you to be prepared and actually take advantage of some of these moves that we have. Now, if we move forward to the Nasdaq futures markets here, the Nasdaq should look a little bit different in that this had a little less volatility than the S&P and the Dow. The Nasdaq, the only one time we breached our entry line was towards that final edge of the hour, or the final hour, excuse me, the 12 to 1 p.m. Pacific hour, where we had price action breach our sign entry line. So if I zoom in here, you can see that a little bit better. We had price action breach our sign entry line on the short side. You then had the edge signal in this arrow in itself, but we never got a pullback for an opportunity to enter the sign lines or better. But to give you an idea of if that move did work out or not, you'll see just how effective that flush down lower was, which again should help to build confidence not only in our scalper volatility box models, but the idea of really fading either side's edges as a whole, especially when our rules are met. And then finally, the last market which we'll talk about is the Russell futures market here, which if I zoom out again, the Russell also had a good amount of volatility. Starting off, the first trade in the Russell that we actually had trigger was an opportunity to get short right here when we had price action rally into our sign entry lines. You then got 3 edge signal arrow confirmations, led to a really nice move down lower. We fell just a little short of the actual sign lines right here, but you did come inside of that zone that I've talked about quite a bit of times, along with having plenty of edge signal opportunities here. Then you had a rally into the close as well, but no other breaches of the volatility box lines in the Russell futures markets. So I did think that that was interesting here, where the Russell and the Nasdaq were the ones that were a little less volatile compared to the S&P and the Dow, which really the S&P and the Dow basically looked like they were going inside of our volatility box ranges, really just ping-ponging from one side to the other side, and back and forth we went, compared to markets like the Nasdaq and the Russell, where you had to be a little bit more nimble. The Nasdaq was just a wick touch, but the Russell still gave you this fairly nice opportunity, which gave you both a T1 and and T2 in terms of targets as well. So that's how I'd be looking at trading this pre-election volatility. I expect this volatility to continue into next week as well. We've seen this exist into last week. We saw a good amount of breaches last week on our scalper models. We saw this yesterday as well. Continued again today, and hopefully continues to the rest of this week into next week, giving us some really nice opportunities to take advantage of this pre-election volatility using our scalper models. All right, take care everyone. Good luck trading, and we'll see you in the next update.